This is the Crypto Hipster podcast. This is not a traditional interview show. These are perspective driven conversations with founders, builders, and independent creators shaping what comes next. We go beyond headlines, beyond hype, and beyond price to explore ownership, freedom, and opportunity in the digital economy, where builders talk freedom, not price. Hello, everybody, and welcome back to the Crypto Hipster, where we talk to the people building the digital economy and not the headlines surrounding it. My guest today, I spoke to him a couple years ago. A wonderful conversation. I'm delighted to have him back. I'm joined by Karl Kreder, who's the co-founder of Dominant Strategies and one of the architects behind Quai Network. Karl's background spans academic research, distributed systems, and blockchain architecture. But what I'm really interested in finding out more is, the person behind our conversation. Karl, welcome.
Hey, thanks for having me.
You're welcome. Or I say welcome back. so, um, so I want to start out before there was crypto, before there was dominant strategies and Quai Network. Who is Karl Kreder?
So, my undergraduate degree was mechanical engineering. And prior to working in crypto, I was working on electric vehicles. I was working at a place called Southwest Research Institute, and we were doing early hybrid electric vehicle development. And that inspired me to get into batteries and battery control systems. I actually started a consortium while I was there to do pre-competitive testing of what was novel technology at the time of lithium-ion batteries. And that eventually led me to getting my PhD in material science at the University of Texas at Austin. So I worked on that for a number of years. Figured out that lithium-ion batteries are a maturing technology. So not necessarily a great research career to go into. And during my PhD, I also discovered Bitcoin sometime around 2012. So that got me very interested in it because of sort of the libertarian cypherpunk underpinnings of it, specifically around having sovereign individuals as well as removing the arbitrary ability of the state to set monetary policy in such a way as to steal the accumulated wealth of its population. So that's what really got me interested in Bitcoin as sort of a fundamental tool of, human freedom as well as human coordination. Right. And I think it's a much more efficient potential tool in that in many ways, a proof of work blockchain is kind of the digitization of the idea of gold, right? And that gold, if we look at it, really is a Neanderthal representation of proof of work, in that a physical unit of gold over time and space is sort of a witness to how much energy was expended finding, mining, and refining that unit of gold. And because that unit of energy is relatively constant over time and space, it becomes a good metric of purchasing power or value, i.e. money. Disadvantages, obviously, is that it's hard to store, transport, divide, etc. And then Bitcoin sort of came along, introduced the idea of proof of work as a mechanism to solve the distributed consensus problem, but also, at least at a provisional level, import some of those characteristics of gold relative to its cost of production, at least for a short time period or instantaneously in Bitcoin, being related to the cost of energy. And with that, you not only get a system that's not controlled by any central actor and one that's censorship resistant, you also get one, at least instantaneously, that creates a energy-based monetary unit. So that's very interesting, from a societal perspective. And I think having money that is sort of free, fair, and energy related is kind of what we need as a society to continue to advance.
Great. So why how'd you get interested in engineering to begin with?
Um, I think I've always been an engineer. When I was a kid, I'd be building forts in the woods or trying to make some type of flying contraption or a hovercraft or something. So, I don't know what that innate motivation is. It just always interests me to solve problems and solve problems that potentially had quote unquote cool outcomes.
Very cool. So you went into academia. So you're building stuff, you go into academia, which to me is kind of it seems a little boring, more boring than building stuff, right? So did academia satisfy your curiosity or did it frustrate you?
Um, so PhDs are very interesting. Um, I think depending on the mindset and like where you come from when you get a PhD, it can be very helpful or it can be worthless. It's kind of like one of those two things, but it really depends on the attitude you take towards it as well as, who you're working with as an advisor. Um, I um found the PhD interesting because it helped you to refine the scientific method in a more advanced way in terms of what questions you ask, how do you design experiments, etc. And I think that's really valuable. um, that being said, if you look at academia as a whole and you look at how funding is done and what the incentives are around that funding, really creating sort of marginal or very like incremental results and then sort of promoting those as being profound results, such that they get in high impact factor journals, which then allow you to get new grants, which then allow you to sort of write new papers, in doing so in such a way that you kind of know the outcome before you even write the paper or do the research, that you're kind of going to get the result that are positing the grant. Everything's surrounding incrementalism, only publishing positive results and not really asking um, any questions of unknown outcome or what I would really say curiosity or high merit. And so with that, academia was originally one of the reasons I wanted to get my PhD, but observing academia through that process basically turned me off to the idea.
Got it. So then when did Bitcoin first appear on your radar? And then going back to the idea of curiosity, what did everybody else misunderstand about it that you immediately saw?
Yeah, so Bitcoins came on my radar. I mean, the first time I heard about it, I want to say it was 2011. And I heard it on NPR, and they were talking about how it had crashed from $30 down to $3, and how all the bros in Silicon Valley were using it to buy drugs online. Um, and when I originally heard about it, I went to try to buy some. Um, and the process for buying it at that point in time was very convoluted. You had to take cash to like Walmart so that you could get like a MoneyGram, and you can convert that MoneyGram into say like something like an OK Pay card, and then you could take the OK Pay card and turn it into some sort of certificate for a site called Mount Gox, where you could then go ahead and buy some Bitcoin. But it was like a very convoluted three-step process. And at that point, I'm like, no one's ever going to use this currency. What bullshit is this? Which is the most costly decision I've ever made in my life. But a year later, once I understood it better, I mean, honestly, I think what really got me interested in Bitcoin was when you initially look at Bitcoin, there's some discomfort about it because there is a um there's a network effect that makes it work, and network effects make all money work. But depending on kind of how you interpret that network effect, it has close analogies to a Ponzi scheme, right? It isn't if it's self-sustaining and it's just used and it's adding utility, but if you look at it at the very rote level, like why does it work? Why does it go up in value? Because more people use it, right? And so like you need to be an early entrant to sort of maintain that value, etc. Um, Now, the interesting thing about that was kind of like my first appeal. Like there was like, I wasn't like this is a Ponzi scheme, but there's like discomfort with it, right? Like there's something not 100% right here. Um, and so basically I started learning about the Federal Reserve System. And once I understood how money worked, I went back to Bitcoin. I'm like, this is 100 times better than whatever that is. Right? So, so really, truly understanding Bitcoin, and the ideas around proof of work and monetary policy and like what good money is, um, for me, that evolution was actually understanding how money works. And I will say back in that time period, it was actually very difficult because most things that you can look up now weren't really like available. So for example, in that time frame, Googling, is the Federal Reserve privately owned? That was like a conspiracy theory, right? Um, is the Federal Reserve part of the federal government, right? It was like these like deep Reddit and 4chan threads that would talk about like the structure. Now you Google it and you get the St. Louis Fed and it'll be like Federal Reserve, is owned by the member banks who are the shareholders, et cetera, et cetera. And like you can figure this out and they, issue dollars by buying debt from the treasury. But like this was very opaque. Um, Back in the day, right? But eventually once I figured that out, like Bitcoin started making a lot more sense in the context of how money works. I mean, it even makes sense relative to gold. I will say, there was a subtle point that I was making about um Bitcoin and Bitcoin not being perfect digital gold in that only instantaneously does the value of Bitcoin reflect the energy that goes into minting it, which is effectively like what gold does. But over time, because of the halvenings in Bitcoin, it makes that arbitrary scarcity cause early adopters to sort of get a better price than later adopters if the system continues to grow. So it's actually instantaneously like gold only in that the cost of minting a Bitcoin typically reflects the cost of producing it, but over the long term, the cost of producing it is always going up. So it's a little bit like a hybridization of gold and a stock. So like gold instantaneously, but like a stock on these longer time frames. And that's where you see this cyclical volatility, that you wouldn't necessarily see with a gold native asset.
Right. So you saw Bitcoin, you saw there was a problem with it, right? You instead of going to work for somebody to try to fix that problem, you became a founder, co-founder. You started Quai Network. What made
Well,
you?
so actually in between, I went to work for Consensus, and I built the Lattice One hardware wallet. So there were two things that I sort of saw as problematic with crypto as it existed. Um, Certainly when I was finishing my PhD, which is um, the interface was not yet adequate to get my mother to use it, i.e., get mass adoption, um, and certainly not to do it in a way which also allowed for self-custody. And it's kind of my premise that if you look at these crypto systems long term, for them to have nation state like resilience and therefore independence, um, people not only need to use them in everyday commerce, but they need to use them in everyday commerce while being their own custodians. So the sort of ideal outcome of a crypto system that creates maximum resilience, and a layer of this is social resilience, is that they use it for everyday commerce. So that actually talks to a scaling problem, but also that every person can use it in a self-custodian way. So the problem that I was addressing with the Lattice One hardware wallet is how do you abstract the public-private key ownership in a way that anybody can use it? And we were the first ones to introduce smart cards as effectively HD wallets. So from the user's perspective, you have a smart card, very similar to a credit card. It has a little chip on it. You'd stick it into your hardware wallet, enter a PIN, and then you could do a transaction in that way, right? If you actually look at a Visa MasterCard like system, they're very similar. They're about 90% similar to crypto than they are different. And that when you have a credit card and you have that chip, and you tap to pay or you insert it to pay, the card sort of number you can think of as your public key, and the private key that is on that chip is actually signing a message and sometimes using the exact same curves as Bitcoin, right? They typically use, an R curve instead of a K curve, but they're both ETC curves. And they're signing a similar message, which basically says, I am paying you X, units of currency, which is exactly what a Bitcoin transaction looks like. The only difference being is that message is going to a private ledger at a private institution, i.e., your bank, which is reconciling the balances. Whereas with Bitcoin, it's going to a public ledger and getting recorded as public balances. So you don't have the sort of trust associated with your balance being in, a single private institution and them honoring that balance. Right, with Bitcoin, it's on the public ledger. As long as everyone's cooperating and the state of the chain is advancing, you have that. And as long as you have that private key, you have that, right? So there's no dependency on someone honoring your assets, right? Um, and so that's where they diverge. But to make it as usable, right? My mom knows how to use a debit card. She knows how to tap to pay. You need that interface for crypto to work in a self-constrained way, and that's really what I did at Grid Plus. Now, when I was at Grid Plus, the other thing that came up is that scale was a huge limiting factor. So even if you have, this nice system and you can do these tap to pay or chip to pay operations, you use that at any scale, the blockchains themselves just fall over, right? So then the question became, okay, now the problem isn't the UI UX. The problem is how do you actually scale this such that a blockchain can be used for a real application in real world commerce? And that's when I started thinking about how do you scale blockchains. And that's eventually when I came up with the idea of, at the time, we called it block reduce, but it's this concept of a hierarchy of merge mine proof of work chains that effectively allows you to shard and subnet um, without sort of sharding work. So you can have a proof of work based system. That proof of work based system can scale. It can scale sort of both vertically and horizontally, getting you worldwide commerce type levels of throughput at Visa Mastercard like speeds, and doing it without sort of centralizing into a blockchain, right? At that period of time, a lot of people started focusing on proof of stake, and with proof of stake, they were kind of compressing the number of nodes. And if you sort of dramatically reduce the number of nodes that you have operating in the system, you can get much higher throughput just because you don't have as high of a replication requirement. You can have much beefier nodes with higher throughput requirements on terms of your bandwidth in your compute. So you can kind of juice up the system by compressing its decentralization, so kind of centralizing it to a few operators and then making those operators have very high participation requirements, which is kind of where Solana like took this, right? My goal was I want something as resilient as possible, so still open to global participation, but getting you that high enough throughput that you can actually use it for real world commerce, right? When we go back in time to say 2017, an example on Ethereum was CryptoKitties came out. And CryptoKitties was just this idea of an NFT that could breed, right? And it like broke it like broke Ethereum for a month. But because the fees went so high, it also like killed CryptoKitties, right? So like everybody was into it, people were breeding these cats and trading them. But because the fees went so extraordinarily high, it kind of choked itself out. And you've seen that story sort of again and again. Anytime a nascent application gets product market fit, it kind of gets choked in the cradle because the chains underneath it don't scale. Now with Solana, we've transcended that, but I would argue we've lost sort of the credible neutrality and the true decentralization of the system was when we've done that. And one way that I kind of observe that is let's look at Iran, right? What currencies did Iran accept? They accepted Bitcoin, right? They didn't accept Solana. There is no world in which I would ever think that Iran would accept Solana or ETH as a mechanism for payment to allow ships to cross the Strait of Hormuz because they understand that it is controlled by the Western powers and they would get their assets frozen or restricted in some way. But Bitcoin was their go-to because it is the most decentralized proof of work system. And that's kind of, I think, the litmus test for how you can achieve global money, because when we look at these nation states, the ability to mint is sort of the root of their power. So, if they are truly challenged, you need something as resilient as Bitcoin, not something like Solana.
Got it. So I'm not going to challenge you on the engineering. Your engineering comes shining through. I hear it. You know, but how did you deal with Quai Network not being able to be scaled at the same level as Bitcoin, and what did you learn about leading people during this process and your relationship with people that have impacted your leadership to what it is today?
Um, good question. I mean, I think that the thing that has made Quai, I mean, Quai was a very ambitious project, right? No one else has really scaled proof of work. Quai is the only system that's done it in a meaningful way. You might say Casper has, but I mean, Casper is still a single threaded system. They can maybe get to 1 to 2,000 TPS, but at that point, they're going to sort of exhaust what you can do in a single thread. Whereas Quai, we can do about the same thing in one shard, and then we can add sort of a multiplicity of shards. So it truly is the only proof of work system that can globally scale. So it was a very hard problem to solve, and we had to solve it over a very long period of time. I would say that the people that have been involved believe in the mission of trying to create decentralized money, and that's really been the success, I think, in my leadership. And that one, right, is a very hard technical problem from the conception of the idea in 2018 through we got NSF funding for it as a research project in 2019. And it's kind of sat as a research project until 2022, where we raised money full time, and then it took us 3 years actually to get publishable, launchable implementation. Um, the people that were involved in that believe in the idea, both from a technical perspective, but also a philosophical perspective, as needing this type of tool in a digital world. So it's not really about, um, you know, um, it's about working towards the goal of maintaining self sovereignty and freedom in a increasingly digital world, and people are willing to embrace that idea because they see what kind of is happening in the world and then work on a palpable solution for very hard and for a long period of time.
Got it. So I hear you being very comfortable with certainty. How do you handle uncertainty?
Um, well, I mean, there's sort of like the engineering response to that, which is, you need to look at your sort of surfaces, what you don't know, kind of the Dick Cheney known knowns, known unknowns, and kind of design around such things. Um, but I think more philosophically, if you look at how do you deal with uncertainty, it is knowing that you are working on something that is worth working on, which there are not many things that are worth working on in this world. And two, it's kind of having faith that in doing what you think is right, that eventually the karma will play out in your favor. And even if it doesn't, you can still, sleep well at night, knowing that you're at least trying to improve upon the world.
So you transition Quai Network to dominant strategies. How is that transition going? And how do you, Dr. K, deal with the uncertainty of being in a new area of the company?
Well, so Dominant Strategy was formed through venture funding. Polychain kind of led the round, and that was the development company that developed Quai Network. So really, we're in the process. Dominant Strategy still exists. Um, But the idea is that over time, the system becomes sufficiently decentralized that other entities are also helping to maintain and ship it to whatever degree that it needs to be maintained. One of the things that we did with dominant strategies is we didn't launch Quai quickly. We launched Quai in what we thought was very close to an end state. We didn't want to leave like a bunch of holes and roadmaps open with open promises, but actually show that you can scale this system. You can do the hierarchy of merge by change. You can do the sharding. You can do the scaling, etc. Before we launched it. So dominant strategy exists, and we work on really the tooling at this point, as well as like application development, more than the protocol. The biggest change that we did end up making to the protocol was something called SOAP, our Subsidy Open Market Acquisition Protocol. So one of the problems that we recognize with proof of work is that when a proof of work network launches, you're paying miners every day for hash rate, and you need that hash rate to secure the chain. Now, the miners have real costs, so they're going to be selling that token into market to cover those costs. And maybe some is sort of a speculative margin, but say 90% of the miners are going to sell their tokens as quickly as they get them, just to kind of operate on a profitable basis. So it creates a lot of sell pressure, and that's not unique to Quai. That's just aspect of proof of work mining. So what we realized is that we could effectively merge mine Quai with other chains, and the idea of merge mining isn't necessarily new, right? Dogecoin did this with Litecoin. There's been a number of sort of meme coins that mine with Dogecoin, etc. And even going back to the early days of Bitcoin, right? Namecoin was the first merge mined coin with Bitcoin. It was actually sort of endorsed by Satoshi. So merge mining is, I would say, a good idea. Now, the problem economically with merge mining is a lot of times miners will just sort of get the secondary token who are disinterested in the secondary token, and they'll still go through the process of just selling that token at market. So you don't want to give that token to miners who are completely disinterested. So what we did is, instead of saying um, the miners get both tokens, we said the miners get Quai, and the other token that's generated goes back to the protocol, and those tokens are used to buy and burn Quai. So that means that people that choose to mine Quai have to have some vested interest in Quai, at least over the duration of the maturation of the tokens which they mine. And the sort of selling then goes to the pressure goes to the other systems that are being merged mined rather than Quai. So it creates a sort of restricted set of miners that are forced to take an interest in Quai, which prevents sort of disinterested miners from just using it as a mechanism to sort of pad their book. And that's been incredibly successful for us. We launched that in December of last year. We merge mine currently with Bitcoin Cash, Litecoin, Dogecoin, and Ravencoin. We've generated almost $6 million in revenue. So all in all, I would say SOAP has been probably sort of the most successful change that we made to the protocol post launch. But also what it really does is sort of flips the economics and the competitiveness of proof of work on its head. Where in long term, our goal is to actually start merge mining with Bitcoin. And what this really does is this removes the barrier of hash as like a moat. Because what it basically says is that anybody can sort of repurpose somebody else's hash if they're not fully sort of using that hash. So if we look at Bitcoin, they have a ton of hash rate, but they have relatively low throughput and relatively long block times. So we would argue that from a physical constraint perspective, they're not fully utilizing that hash rate. So we can kind of repurpose it. And if we add more value over the long run, then we can sort of take some of that value away from Bitcoin and manifest it in Quai, because we're not sort of separated by different hash rates. We can subsume some of their hash rate to secure our network without having to fully pay for it. So longer term, it takes what was a relatively moated system of first mover advantage protected by high hash rates into ideally what I think longer term will be competitive utility systems, not based off hash rate, but who can offer the most utility using the same hash rate.
Got it. Got it. So obviously you're very in depth in the details, right? But I want to find out, from you, what sacrifice you've made in your life that you don't really talked about too much.
Oh man. Well, I have a family, and there's been a lot of hours away from that family. Um, I don't know if the wife has fully she's been great. But yeah, there's definitely been some stress there. Also around the structure of the organization as well as the foundation. I actually live in Puerto Rico now. So I actually moved my family to Puerto Rico. So there's been a lot that have gone into the project. I mean, I'm also heavily invested myself in supporting and funding the project. So there's been a lot of sacrifice that has happened to make this work.
What do you like about Puerto Rico?
Sorry.
What do you like the most about Puerto Rico?
Well, besides the not having to pay tax, I love the weather. So I was already kind of becoming a solar maximalist in Texas, but yeah, it's even sunnier and nicer in Puerto Rico, and you don't have winter time. So in Texas, it was like kind of depressing from about November to February because it wasn't sunny enough. But in Puerto Rico, it's sunny every day of the year, pretty much.
So, do you find other founders that suffer from the or struggle with the balancing the family and the wife relationship? And how important is it to have a supportive spouse when you're a founder?
Yeah, I think you either have to not have a spouse or you have to have a very supportive one. And there's not much going to be in between there. Yeah.
Got it. Got it. Awesome. So, I want to thank you very much for coming on the show. And I have one last question. You know, um, this is probably a good one for you. Why did what did building a company teach you that you could have never ever learned in a classroom?
Um, when you start a company, there's kind of a naive assumption about uh alignment of interests. And that can be across, you know, employees, co-founders, venture capitalists, market makers, lawyers, etc. You always want to game theoretic information that you're getting based off of the incentives of the party that you're dealing with. So to assume that your interests are aligned with the VCs is not a good idea, but even to assume that your interests are necessarily aligned with the counsel that you've hired is not necessarily a good idea. So in all scenarios, in all parties, when you're dealing in business, you want to always game theoretically analyze the other party's position to filter and contextualize the information that you're getting to make better decisions.
Got it. Thank you. So I want to thank you very much, and I appreciate the time you came on and talking to me today about what you built and how you've grown building it. It's appreciated. Thank you so much.
Yeah, appreciate it.